All right. Welcome, everyone, and welcome to Wealth Conversations with Gaitha. My name is Gaitha, and I run Regal Africa. And I am very happy that you're in today for the 7th episode where we'll be talking about investing. Today, I do have Elizabeth Mkuku, who is the CIO, or the Chief Investment Officer at Saiton Investment Management. And I'm very excited to have her today, and we'll be talking a little bit more with her really about investments and the investment vehicles that are out there, especially money market and fixed income investments. Now, for some of you who have not joined this wealth conversation with Gaitha before, I want to welcome you and let you know that the reason I started this wealth conversation is because after COVID in March, a lot of people had all these questions about how do I manage my wealth? How do I grow my wealth? What do I do in this season? Because all of us, there's a lot of uncertainty and we don't know what's going to happen next. So I took this opportunity to actually create wealth conversations with Gaitha, and every episode that happens every Wednesday between 6 p.m. and 7 p.m., we have different people who come in, join us and share information, and I share information about how to create wealth and how to manage one. So thank you very much for joining us. For those of you who are in Zoom, I see a couple of people who are strolling in. Thank you. We are also live on Facebook. So thank you for those who are joining us. And I will have to say that if you are on Facebook, just go ahead and just put down your name and where you're from, because we actually have a global audience. So people join us from different places around the world. So just go ahead and put your name and your and the country that you're from. And what we encourage all of you to do is to ask any questions, because I am here to answer your questions, and Elizabeth too will be answering your questions. And so thank you again for joining us. Now, before I start about the show exactly and really engaging with Liz, I call her Liz, engaging with Liz about money market funds and fixed income, I really just wanted to take the time to just share with all of you exactly what a money market fund is. Because for me, a money market fund is basically the simplest way for anyone to start investing. And I have been surprised over the years that very few people understand what a money market fund is and what the difference is. So I will take a few minutes just to go through that real quick before we start the conversation with Liz. So for me, I actually say that a money market is probably just the best place for you to actually start investing, especially your emergency fund. For me, I usually recommend people to put at least 3 to 6 months of their monthly expenses in an emergency fund so that they can access it anytime. But because of what's been going on the last couple of months, I'm even encouraging people to actually put more than 6 months. I'm saying if you actually have the ability to keep aside 12 months of your monthly expenses, then it's the best thing to do, because what we've realized in this new normal, things are not always the same. Before you used to say in 3 months, you'll find a job or you'll be able to turn around your business, but we are realizing that's not happening. So right now, in this time, the best thing is to actually say, can I put at least 3 to 12 months of my monthly expenses? And the best investment vehicle in this case I would recommend would be a money market account. And why is this? Why should you put it in a money market account and not into a bank, or to put it into a savings in a circle? The first thing, because again, it's a place whereby you can deposit money anytime, right? So you have an extra 10,000, extra 1,000, extra million that you don't know when you will need it. You can easily transfer it into your money market account. Again, when you want to access it, it's very easy to access it within 24, usually it used to be 2 to 3 days, but recently, because of the digital transformation that's happening in the fund management industry, we are seeing that it's taking less time to access your money, and hopefully Liz will share that about that. So that means you can deposit money anytime, you can access it anytime, but it is better than putting your money in a bank or whereby you can actually go to the ATM and remove money from your savings account. And again, also, if you need to access money, you don't have to pay interest. Like if you actually went into your SACCO to get your money, you would actually have to pay interest in that. So the money market is a good investment vehicle because it is liquid. you actually get a higher return than what you would get from the dividends in a SACCO or from the interest rate that you would get at the bank. So those are some of the things that you're able to get. Again, one of the great things about a money market account or a money market fund, it is actually managed by professional money managers. These are people who are licensed by the Capital Markets Authority. So there's a regulator who's overseeing what it is that they are doing. Where are they taking your money and how are they deploying it, so that you know at least you're able to have at least some assurance that your money is safe, right? Because in all investments, you know, there's no guarantee, but at least, you know, there's safety around that. So security is very important when you're thinking about investing in a money market account. One of the things is that your capital is guaranteed, because the funds are actually held in custody by a licensed custodian bank. Again, where a fund manager puts the money or in custody, it's already licensed. So again, the funds are separate from the fund manager, which again gives you security. Because for example, if you put your money in the bank and for some reason that bank goes under, right? There's a run on the bank that you've seen like the last couple of years, and people don't have access to your money. The thing about putting your money in a money market account is it's separated from the fund manager and the custodian account. So that's the first thing around security. The other thing I alluded to it earlier is about efficiency. You can access your funds anytime, you can deposit anytime. So I'm always telling people, whenever you have something extra, you know, you have a side hustle or you get money from a friend or just something different, put that money into this money market fund and you will be able to get a good return on investment. It's very flexible, so there's no fixed contract, right? So again, usually when you open an account, they tell you need to put the money within a certain amount of time, maybe 2 weeks, a month or so, depending on the fund manager. But other than that, you can deposit and withdraw anytime. So there's no contract. And that's the difference between a money market and fixed income. And again, we'll go into discussion about that later on. The great thing also is that you can top up money anytime. As I've mentioned, you might have extra money that you didn't know you're going to have, or even this time of COVID, when you're realizing, you know, the money that I was actually spending, going to get my hair done, going for coffee, doing different things, I'm saving money because I'm not spending so much money paying for petrol or, you know, doing different things because you are working from home. That extra money is what you now need to be putting in a money market fund, because you have the ability to top up this money market fund anytime. And so those are some of the benefits. Again, it's professionally managed. And again, for me, who really has been looking at this industry and telling people that you need to find the best returns that you can get based on your risk tolerance. If you actually compare how much money you can make in a savings versus how much money you can make in a money market fund versus other conservative investments like treasury bills or bonds, you will see all the time the money market outperforms these funds, and especially with the best money market fund managers out there. We at Regal Africa actually work with about 8 different licensed fund managers, and it's because we've been tracking them over time. They have a good track record, they have good management, they know what they're doing because they're professional money managers. So that was, I just wanted to just give you an overview about the money market fund, because a lot of people don't understand it, and I just wanted to simplify. It's really an investment fund, but really you can use it just like your savings. Like I said, instead of saving in your regular bank, you can save in a money market fund, and any extra money that you get, you want to put it there. But we recommend at Regal Africa to actually put a percentage of their money. So if you know your salary is this amount of money, at least put 10% into a money market fund, and add to the point whereby it reaches whereby you have at least 3 to 6 months of your monthly expenses. Then now you can now speak to a wealth advisor and say, okay, what else can I do outside a money market fund? But that is the best space, what I say, the entryway into investing, because again, you are guaranteed that you're not going to lose your principal. You actually earn interest daily, which is the beauty about it. Every day interest is calculated, and you're able to know what the interest rate is because you can look at our daily papers. It will show you this fund manager, this is their daily rate, this is the annual yield. So it's very transparent, very transparent. So for a lot of people who are conscious and are not sure, I think I've worked with this bank for a very long time. I am more comfortable with it, and they're not too sure they want to put money in a money market fund. I say, once you look at the returns and once you understand the security behind it, the fact that the funds which are in this money market fund are actually diversified. So it's not just one bank like I alluded earlier, it's in different asset classes. And I hope Liz will talk more about it. You'll understand why you want to be in a money market fund than put your money into a bank or into a savings. And it is the start way for you to start investing. And so with that introduction, I would like to introduce Elizabeth Nkuku. She's called Liz, I call her Liz. She is the Chief Investment Officer at Saiton Investment Management here in Kenya. And I know for all of you who have been in Kenya the last couple of years, you've been seeing all these billboards. I don't know anywhere you can go without seeing Saiton. Saiton is a new brand. Well, you'll tell us a little bit more about that and how you started, because she's actually one of the founders. But it's everywhere you go, you actually hear Saiton, and a lot of people also don't understand what Saiton does. So I thought it is best to bring her, because also she's also one of the few women in leadership in the investment world. So when you're talking about investment banking, fund managers, stock brokers, there are very few female who are in leadership positions or who actually own this company. So I really am proud of Liz, and I would like her also to share her story, and as we have this discussion about what it is. I'm just give me a moment, because I'm trying to pull her bio, because she's done very many amazing things. Just give me a moment here. All right. Okay. It looks like I'm still waiting for her profile to upload so that I can share it. But just top of mind, maybe I can just say what I know about her, and maybe if I miss anything, Liz, you can chip in and tell me about that. What I know about Liz is she is, of course, she's going through her PhD. I don't know if she's actually completed that. She has an MBA. She is also a certified public accountant. She's a CPA. She is also a CFA, so certified financial analyst. Last time I mentioned to you, there are less than 100 people who are CFAs in East Africa. So when you talk about an accomplished woman, an investment professional, you're looking at her, Elizabeth Kuku. She has actually studied investment. She actually has experience in investment. And with that, she actually then started, she was one of the founders of Saiton. So I can tell you she's very accomplished. So I'm very excited about having this conversation with her. So maybe with that, Liz, I apologize, I can't upload your profile. Maybe you can share with us your story about your investment career and how you started before we now start talking about money market and fixed income investment options. Oh, sorry about that. It looks like you're on mute. You can unmute yourself.
So thank you, Anne, for having me in this show. And thanks for the good introduction. So maybe first of all, to start with Elizabeth. Elizabeth is a mother, first of all, and then a professional investment manager. I have had a long, maybe journey in the investment industry. Have been lucky to have worked under very good bosses who have pushed me beyond what I think I could have accomplished. So I started my career in Pine Bridge. It's currently called Sanlam. So that's where I understood what investment was. I really didn't know before I got into the industry. So I've been one very lucky person whereby every place I have been, I've been challenged and I've become a better person. So I started with PineBridge, worked for Genafric, worked for Britam, and now at Cyton. I'm happy to have been one of the pioneers of the Cyton brand. And the main reason maybe Cyton looks or sounds different, it's I think the energy levels and what you want to give to back to the society. When you think about you being able to be in a supermarket as you shop, you realize you don't have money, but you have money in a money market fund, and you just need to dial *809# and you pay for your bills. And that is something that we have not seen anywhere in this market. So for us, it's for Cyton, it's really giving the best solution at all time and thinking about the client all the time. It may not 100% be there, but I think we strive to do the very best.
Okay, thank you, Liz, for that. I appreciate you that introduction, a brief about what Cyton is doing in the market, very innovative. And of course, a lot of people are, always watching and are cautious, wondering what exactly is Cyton. So you will go ahead and just share with us a little bit about that. I think my first question for you, Liz, is this. When your team established Cyton brand, and at that time when I knew you, you were known for really structured products, fixed income investment options, and then real estate. And now you actually last year started into the money market funds. My question is, since this is what you've known for, is that what you believe people should be investing in? Why did you choose the type of products that you brought into the market?
So for us, it's been a journey. So for you to distribute to different people, you first of all have to understand people. You have to understand what they want to invest in, what are their risk profiles, what is the liquidity requirements, and things like that. So when we started, we could not be able to go to the mass market to distribute and sell. A money market product is largely, I would say, a retail product, whereby someone with 1,000, someone with 5,000 should be able to invest. It's really a beginner sort of, it's not a beginner, but it helps people who are beginning to invest to actually access investments. So when we started, we didn't have the license, and you cannot go to the mass market without a license. So what we did is looked at the regulations and looked at what is the best place for us to start investing. So the best place then at that particular point was to do under the private market, whereby I have to identify Anne and make sure that Anne is a sophisticated investor. They will understand investments. I will sit down with them. They will understand what I'm doing before they put in their money. But for the money market fund, the reason why it looks a bit different, the investments are very diverse and you can invest in very different things. So the diversification concept really diversifies away a lot of risks. Whereas when you're looking at a private offering, maybe you have a lot of concentration in particular asset classes. So then you have to only focus on alternative assets. So that was the main reason. Then at that particular point when we started, when you look at the real estate sector, still has a lot of potential. So when you think about residential markets at the right price point, I think the demand is there. So we actually thought for any investor wanting to invest in real estate or to have exposure in real estate, at that particular point in time, they had to do maybe the brick and mortar. But now what the question was, not all of us have the time to go look at the foreman in the construction site. So, but I still want the return that comes with real estate. So what do we do to make it easier for you who has a full-time job and cannot go building an apartment or things like that? So what we did is came up with a product where you'll put in money, we'll put that money in the real estate sector, and then you get the returns, part of the return that you get from the real estate. And me as a fund manager, I make my money through a fee. So I'll just charge a fee on that. So you're happy in that you're getting a good return. I'm happy because I'm getting my fund management fee, and you all walk home happy.
All right, great to know that, because a lot of people always wonder if you are actually giving away such high interest rates, how is Cyton making money? So with that, I think my next question for you is something you've just alluded about, people who are working and are not able to get, for example, into real estate, but then they can actually invest in your products. One of the major markets out there that I have discussions with is actually the Kenyan diaspora, who are looking to invest back home. And for a very long time, they're interested in real estate. But then again, there have been issues around investing in real estate and trust factor. The question I have for you is, what special offering do you have for the diaspora investor, for somebody who's out there who is not familiar with the Kenyan marketplace, but they want to invest and get the really great returns that are being offered in the market, what is special offering are you offering the diaspora?
So when we started, we wanted to do a diaspora specific product, but we realized that you might not be able to get a lot of money to put in there. So being able to give them specialized returns. So what we have done is within the product offering that we have created features that will be able to talk to the Kenyan diaspora. So if someone is looking to wants to buy a home or wants to buy an apartment, how do you make it easy for them to transact with you? So we have a US office whereby if someone wants to maybe place money or buy the apartment or anything, we have a US account. So they will actually deal with our representative in the US. So making it very easy for them. Right now, what we're actually doing on the money market side is to see what is the easiest way for you to send money back home. Right now, you have to send money through our US account for us to be able to invest it in the money market. But now with the money transfer services that are available, so something like Wave and everything, how can we make it easy and very cost efficient for you to send money into the money market fund currently here? So those are the discussions that we are asking ourselves. There is someone who wants to invest back home. How do you make it easier for them? The products, I think, in the Kenyan market still have the best return. So when you're thinking about a money market fund here, you're getting a return of 11%. I think in the US, you'll be lucky to get a 3% return. Even with the currency depreciation, you're still much better investing in the Kenya shilling. So those are some of the things that we are thinking about. But for someone who wants to invest in a US dollar account, again, we have to give the best options. So we're just looking at the client and saying, this is the same client. Our clients are different, their needs, but we can actually bring a product that speaks to all of them, but bring in the different features that speaks to them specifically.
Okay, so what I'm hearing you saying, it's the same products, but it's just the accessibility that is different. So anyone who wants to get a good return from anywhere in the world, whether they're Kenyan, whether they're in the diaspora or the African diaspora or international investors, they can still access money market funds, they can still access your different investments. Okay, that's great to know. Now, the third question that I have, because some of what I do is before the show, I send out different questions to different people and they answer, they would like those answers being broadcasted right now. So one of the questions that somebody asked is saying was, I have, they say between 100,000 Kenya shillings and 1 million to invest. So their question is, what is the best place to invest in?
Investment is very personal. Just the same way, if you went to a doctor, they will not give you a solution for what you must do. So the first thing that you must look out for is what is it that you want to achieve? This 100,000 to 1 million. First of all, that's why it is so huge. What I would advise 100,000 client is very different from a 1 million client because their needs are different. So you need to understand what are your requirements as an individual. Where are you in your path of life? So when you think about personal financial planning, you need to understand what are my goals? What do I want to achieve in the short term, medium term, and in the long term? What risk can I be able to take? So for example, if I have 100,000 and my kids are going to go to school, I cannot take that money and take any risk with it. It must go to a money market fund. It's not debatable because there is something that will not happen. I will not have my investment stuck somewhere and my kids are at home. So the goals that you have really determine where you should invest. If you have that let's say now we go to the 1 million client. I have this 1 million client. I have 1 million today. I am 100% sure I don't need this money in the near term. And the near term means anything, maybe 1 year. I can afford to take risk with that money. Yes, the return will be higher, but I can afford to take risks with it. So I can actually look at that and say, can I allocate some of this money into the equity fund? Can I invest some of this money into the structured products? That is maybe our set on high yield solution. Or can I just put this money in the money market fund? It grows pole, but I know the day I will need this money, I will get it. If I'm not sure of what I want to do with this money, then it's a pure candidate for a money market fund. Because the day you need it, at a worst case scenario in this market, you will get it within 3 to 4 days. But on a best case scenario, you can actually withdraw immediately. So when I think about what has happened in the Set on Money Market Fund today, you can actually be able to withdraw at any time for any amount that can fit in M-Pesa. Any amount that cannot fit in M-Pesa, and it's with less than 1 million, you get it through PesaLink. So almost like same day. So when you think about it, you are looking at investments in two ways. How liquid are they? What is the risk that I am taking? And what is the total return? You remember, you cannot get the highest return and you have again the highest liquidity. So there is a trade-off that you always have to actually look out for. So what you need to understand is, where am I in my life? What do I want to achieve? Then in that particular situation, what can I do with this money? The money that you have, you cannot, if it's money for school fees, you cannot buy a plot because you don't know when you will sell it. So all those things are the things that you need to look out for.
Okay. Yes, and I definitely agree, because for me, when I'm talking to my clients about investing, one of the things I always tell them is you have to look at three things: the amount of money that you're investing, because it determines what product you can invest. The second thing is your risk tolerance. So as Liz alluded, if you want a really great return, you can't also be very conservative. So no risk, no return. So those are the things you have to look at. And then the third thing is your time horizon. So again, if you want something you want to access in 12 months, 6 months, versus someone who need that money in 5 years, the investment vehicle will be very different. So I totally agree with what you're saying, Liv, and I appreciate that. Now, the other question that I had for you was, again, I don't want to sound like I'm repeating, but I would really like you to answer this question very specifically, because this is someone who asked it. What do you recommend for investors who are starting to invest for the first time? And is it the same investment option for those who are retiring? So if somebody is just starting out, they're in their early 20s, they've never invested before, what is the investment vehicle do they use? And then now someone who's retired, who then knows they probably are going to be living off their pension, or the lump sum that they get once they retire, are there different investment vehicles? And can you just explain in those two extreme scenarios? If you're young, if you're old, what should you be doing?
So the first thing is that depending on your life stage, the investment recommendations are very different. So if you're starting off, you don't know about investments, my suggestion is maybe you start with something like a unit trust. What that does, it orients you to the world of investments. So it will show you what investment is all about, what it is not. So as you gain more, and remember, when you're starting off, you also don't have a lot of money. You don't have a lot of options, because maybe you're on your first salary. You're lucky if you have a 50,000 paying job. So remember, you are basically growing your safety net. So you can also not do a lot of gymnastics with that. So the best place to start with is a more fixed income, return sort of portfolio, and the money market makes more sense. Once then you understand some sort of investments, then you can graduate to something like an equity fund. But my suggestion, and that has always been my way of thinking, you have a full-time job. If you have a full-time job, it's not easy for you to understand all the stocks in the Nairobi Securities Exchange and make the right call at the right time. So it's better for you to go through money managers or fund managers for you to take that investment. So you can actually consider, if you have some lot of capital, maybe you can actually consider applying some into the equity funds and the balanced fund of this market. Because then you have a fund manager whose job, they wake up every day to study the market, and you'll definitely most probably get something better than you do if you invested in by yourself. Also remember, they have many clients, so they can be able to achieve diversification. For you as an individual, with your 100,000, maybe you'll invest in 1 or 2 stocks at best. So it might make sense for you to just invest through a money manager, because you get diversification, and you might as well get better liquidity as well. As you grow older, let me put between the age of 30 to age of 50 or 40. At that particular time, I think first of all, your salary has increased maybe, or your income has increased. So the amount of money that you have to play with is a little bit more. So you can take more risk, and because you have more capital. But as you get to the age of 55, remember, you're not as young as you used to be. There are good stories whereby someone started investing at 60 and you made money. I think KFC started at something. Not all of us are not him. So let's just work with someone who is the normal person. So you're less energetic when you get to 55, 60. So what you need to do is now the money that you have been saving in your pension scheme, you have to be very cautious. because you cannot outlive it. You cannot outlive it in the sense that you cannot finish that money and then start hoping to get the money from your kids. That stopped. I don't think most people will be able to have their kids as a retirement package. So what needs to happen is you have to invest for yourself. So make sure by the time you're retiring, maybe you have a home. So what you're actually looking out for, you are just looking for money for survival and maybe taking a holiday. So things that you have options with. So as you retire, the pension that you get, the most important thing is to make sure that you have sufficient cash to live within it. Your medicals are taken care of with that money before you do anything. And then you have any surpluses. So the best investment options at that particular point in time is where your capital is almost your capital is protected. Your return, in advance, and you cannot afford to lose it. So those are the things that you need to look at. You don't have energy, your circumstances have changed completely, but remember, you're lucky. Maybe your kids have finished school, so you don't have a lot of liabilities, or you're actually towards the end of that. So a young person starting off, money market fund, as you end as well, you might end up with a money market fund or market fixed income securities like investments, because both of them you are learning, and at the same time, you cannot take more risk at the very end.
Okay, I like that. Starting off, you start off with the unit trust because again, you want professional money manager. It's very easy to start and then you build up. But then as you retire, then you want to be conservative, and the goal here is really maintenance and of course your healthcare, your home maintenance. But I have to add this here, even when you're creating wealth, I've been talking to people, you really need to leave an inheritance for your children. So you also don't want to be putting it in investments that will lose money, right? So you want to think about maintaining. Also, we're living longer, but then also at the very end, you also have to be thinking about what do I leave for the next generation. So thank you for that. And I do see here, Francis was really asking about the difference between money market fund and fixed income. I hope you've understood the difference about the money market and fixed income, because money market is very liquid. You can deposit and withdraw anytime. If I put it in just layman language, you can keep adding money into your investment account, which is our money market, at any time. And when you need access to it, you can withdraw. Versus a fixed income deposit account that you're asking for right now, it's fixed. So you're putting it there saying, I will not touch this money for 3 months. I will not touch this money for 6 months. I will not touch this money for a year, 2 years, 5 years. So there are different terms depending on how long you want to keep that money for. And so you have a guaranteed return with the fixed deposit versus the money market. It fluctuates depending on what the money manager can actually negotiate based on, all the investments that they're doing at that time. So the difference really is liquidity and guarantee of return. I hope I answered that question, and also Liz was able to clarify about that. So with that, Liz, what do you think is the next best thing in investing? Should people really be investing in money market and fixed income options, or what should they be investing in? You're the investment professionals. Tell us.
Again, we're going at what should you be investing in. So again, it's very personal, and your circumstances really determine what you should be doing. So at this particular time, I think there is a lot of uncertainty. We do not know what is going on or what is going to go on. We are waiting for direction, I think, from maybe what are they called? The World Health Organization, for any glimpse of hope that we are getting a vaccine or something for the business to go back to normality. So in such situation, then what would make sense is for you to have your money in liquid assets, and at the same time, or sort of capital preserved. So at this particular point in time, so that is one bit, the money that you need to use for survival. The next, I think you said 3 to 6 months, maybe for me, with this circumstances, it seems like we need to elongate it to 12 months or even 18 months, I don't know. So that new normal, but at the same time, remember there are opportunities that come up. So when you think about the equities market today, the valuations we have seen, we might not have seen them over the last, I would say, 5-10 years. So if you have capital that you can wait out, if you have money that you think you can put aside for some time, you don't need this money for 3 years, and you're sure you don't need this money for 3 years, then you can throw it in the stock market, right? If you look at property prices, you might be lucky to see someone who is distressed and you just want to jump in and get that property. So this is what I would suggest. If you have your capital that you must live with or you cannot afford to take, put it in a money market fund. You are protected. Your liquidity is protected. You are getting a good return. You are beating inflation by all means. After you have put that aside, take your 10% that you can experiment with. If you lost it, it's not the end of the world. You get, it's not, you'll cry, but not cry too much. You can throw it in the stock market or in the property market.
Okay, all right. Thank you for that, Liz. In fact, there's a question here from Rose Masaka, who is actually asking, since you're speaking about equity funds, right? And you are looking at the fact that not all of us are professionals, so really investing in the stock market might be not what we know, but we want to take advantage of the great deals that are there, especially if you're thinking long-term. So the question is, does your firm, in this case, Saiton, invest in Kenyan companies only, or do you have a global portfolio in regards to equities?
Okay. So for equities fund, as Saiton right now, we only have an equity fund that is Kenyan and local. So we have as a Pan-African fund for that invests in the financial services in Africa. So we talk about East Africa, South Africa, Southern Africa, and Western Africa. So that the valuations right now for anyone getting into the equities market seems very attractive. So for now, we don't have a global equities fund, but we have a Pan-African fund and we have a local equities fund. Okay. But you can, if you wanted to do offshore, it's something that I think, again, there are a couple of people, and me, you could know them, who offers of offshore assets.
Yes, I do work with different fund managers, but I usually recommend people to invest in Africa specifically, because that's where the returns are. But definitely, Rose, if you have anything specific, we can definitely assist you through our network, because like I said, locally we have 8 licensed fund managers. And if you're looking for offshore investments, then there are different people that I know in my network that I could definitely refer you. And this is through Regal Africa, which is the company that I run.
But maybe to answer Rose, I think by the time you are going offshore, that is also the level of my question. My thinking is that it's a bit more, you need to do more analysis than you do when you're doing it locally. So maybe what would make sense is, before you go see someone who is helping you invest offshore, it will be good to maybe discuss with that investment advisor who has nothing to lose by you not investing offshore. So a very neutral sort of investment advisor, because who is not pushing you towards investing offshore, because also that comes with a lot of risks. Because you see, the amount of money that you need maybe to start off is high. You're talking about currency, so you have to start modeling how currency is going to move. And then the valuation, are they investing in a fund? Are they investing in specific stocks? How well are they able to analyze that? So there is a little bit more work when you're investing offshore than when you're investing home.
Yeah, I definitely agree with you, Liz, because actually one of the things I recommend people to do is not put more than 30% offshore. It's just something that I do. And a lot of people over the years have been burnt, because a lot of people think they've guaranteed outside the country more opportunities, but things have changed. And they changed a while back. And also in the decades to come, you will see the opportunities are global, but you also have to be very familiar with where you're investing or where your financial advisors are, because they understand the local environment. So also when you're investing offshore, you have to be careful, and also understand, do your due diligence on who the investment managers are, because I always think that is very, very critical. Do they have a track record? Have they studied? Are they known in the market? What are they doing? Because that's very important, because you're trusting them with your investment. So thank you, Liz, for that. Rose continued to ask, how has the investing landscape been affected by the COVID? And are there any investment opportunities for those with excess capital? I guess you alluded that when you talked a little bit about distressed sales in real estate, equities. I don't know if there anything else you want to add in regards to excess capital. Where should people deploy it?
Not quite, but maybe to understand the key thing is that most of the assets have been affected, in terms of whether you're speaking about even the yields on the fixed income. So understanding investment from a macro perspective. So you operate in an economy. So in that economy, the GDP has been impacted. Inflation has nothing much has happened there, but the interest rates have actually come down because of what has happened. The government with CBK bringing down the CBR, there's a lot of liquidity in the money market. So if you walk to a bank today, you definitely get a lower return because they have a lot of cash. They have a lot of cash that because of the CBR rate coming down, the CRR rate coming down. The CRR is the cash reserve ratio, which is the amount of money that the banks must hold at all times. So that has come down. If it has come down, it's because central bank is trying to push the banks to lend. But remember, they're supposed to lend to people who have become more, how do I put it, who have become more risky. So they are more cautious. So they end up holding a lot of money. So with that sort of liquidity, then it has affected the deposit rate that you're getting. The uncertainties in the stock market has come down. Maybe real estate, those are the other things. So you have to look at it from a macro environment whereby it has had significant impact. That impact has been trickled down to the various asset classes. So there are assets definitely that are good now, especially let me talk about the banking stocks, because that's what I had just done the analysis for the other day. They still look attractive. Yes, there has been an impact in terms of their their loans being not performing very well, but their asset quality has improved, is still okay. So yes, okay, there are pockets of value.
The pockets of value, but you need a professional who understands these things, looking at it from a global perspective, macro perspective. In this same Kenya, people don't understand when these policies are being put, when, you know, taxes affecting different investments, you know, CBK policies, government policies affect all these things. But regularly, we don't know why that happens, or, you know, but then at least an investment professional understands how these decisions affect the return on investment. So thank you, Liz, for that. I see more questions coming in on Zoom, but not so many on Facebook. I see a few people on Facebook coming in, even from around the world. Thank you for watching. What I would like to encourage you to do is just go ahead and just type in your questions. Again, this conversation around investing and really investing in money market funds and fixed income is really not for Kenya. For me, my clients are all over the world, and I know what the people I'm starting to see on Facebook are even in the States. So go in, write your questions, because you might be wondering, how should I invest if I'm you know, outside the country? Do you want to understand more about fixed income and money market? Just go write a comment and Liz will be glad to answer that. So let's keep engaging on Facebook. And also, if you are able to start a watch party so that different people on your timeline can be able to watch this conversation that we are having, I will really, really appreciate that. So, so Liz, the other question that I have here is, from Francis. He's asking, what are the risks of money market fund? Earlier I talked a bit about really the securities and the different benefits of money market funds, but he really wants to know what the risks are, because there's no investment that is guaranteed. So could you share that with you? What do you think are the risks?
So when investing in the money market fund, the key risk that would appear is the interest rates coming down. So an interest rate risk, because of the reinvestment options. So remember, what the investment manager is doing is pulling funds together. As they pull funds together, they are placing them in a deposit or something, or a government bond or a commercial paper or something like that. So one of the biggest issues is, if I invested this deposit and I place it at 11%, how sure am I that I'll get 11% 3 months after maturity? So the reinvestment risk is one of the biggest risks that we usually have when you're talking about a money market fund. So the other risk that you could face is that maybe a default risk in one of the investments. It's highly unlikely, but it happens. And when it happens, the beauty is if you're not concentrated as a fund manager, then you don't have, the impact is not as much. So as long as your investments are in line with the provisions of the IPS in the investment policy statement and within the CMA Capital Markets Authority regulations, then the impact should not be a lot, because it will just impact your yield, but with time you're able to recover. So I just see the reinvestment risk and the default risk on the portfolio, which I think is not easy for you to actually materialize.
Okay, thank you for that. So with Francis, the only thing I can add on that is that's why you have to be very careful about the fund manager that you're investing with. And that's why we've been doing research and due diligence on them, because there is risk of default for the underlying assets that they invest in on your behalf. So you really need a fund manager that understands the investment horizon and be able to make the right decisions through the investment committee, and as Liz said, through the investment policy statement. What is it, where are they investing, and to make sure that they are not putting things in risky companies through like different commercial papers. So we've seen that a couple of commercial papers have defaulted in paying what they had borrowed, which then affects the return. So that is the only risk. And as she mentioned, also the return risk. I can tell you the last couple of years or the last decade, everyone was offering double-digit returns in money market. But then recently you've seen it going down to 9%, 8%. And that's because the returns in the market are not as high as they used to be. But what you want to remember with the money market fund is that your capital is sort of guaranteed, just like a fixed income. It is the interest rate that goes up and down, versus a fixed income. Your capital is also preserved, but then now you know what your guaranteed return is. So I hope we answered that. Now, Liz, I have Stella here who's saying, sorry?
Just to add on, Francis, maybe when you're investing in a money market fund, it will be good to see their fund fact sheet of what they invest in. So it's good for you to look at the various fund managers and just see what is their fund fact sheet to understand the underlying.
Yes. So as much information as you can get, you can do that. And also what we do at Regal Africa, even when we help facilitate our clients to open up this account with all these fund managers, if you request for that fund fact sheet, we can share that with you. So again, you understand what are the, where is it that they invest in and their track record. So thank you for that, Liz. So we have maybe about 10 minutes to go, and I'm seeing all these questions coming in. So if you have any more questions, be it on Facebook or Zoom, keep them coming so that we make sure that Liz answers those questions. So Liz, I have Stella who is saying, looking at the COVID events around us, what would be your advice on investing in real estate now or later? So specifically on real estate. So I guess we've moved away from money market and fixed income, but Kenyans, we like real estate. So we're always trying to understand it, right? And people are affected because people thought it was guaranteed return, that the returns in real estate will always go up, the appreciation will go up, and now people are shocked. They are shocked. So what is your thoughts around real estate now and after COVID?
So definitely real estate has come down. No, I don't think let me back up. When I was reading the House report and also the KBA's report, the real estate has not been impacted as much. The returns are not significantly down. So what is going to happen? There is a lot of illiquidity. So if you have money right now, it is a good time for you to be speaking, because it is a buyer's market. So you will definitely end up can easily get a really good deal in the real estate sector, because people are looking for money they're looking for money right now. So if you have cash, you can really get a good deal. So I'm just trying to think, it might be one of the best times to get that deal that you really wanted.
Okay, so buyer's market in real estate. So be on the lookout for good investment assets. And remember, in real estate, it's all about location, location, location. So real estate is something good to have in your investment portfolio now and in the future, but you just have to be aware about what's going on. And
maybe just to add something, when you're buying land, it's good to know where you're buying that land. So let me, sorry, I was talking about real estate. I was not talking about land. I had not thought about land, because you can buy land, but you're not able to sell it. You cannot be able to split to sell it to someone else, to flip it. So as you're buying land, be very sure of what you want to do with it. Can you hold it for a very long time, right? So make sure that you're not buying land where you're not sure about development, about infrastructure, for the sake that it's cheap. It can be very cheap, but it remains cheap forever. So just make sure that you're buying the right location, as you said, and you know why you're buying that piece of land.
Yes, why are you buying that land? If you're buying that land so that you educate your children, you might try to sell it and no one is buying. So is it the right investment vehicle? So actually speaking to a financial advisor is important. Thank you, Liz, for that. So right, so we have another question from Joe, who is asking, within Africa, what are some of the countries that are attractive in terms of investment for the long term? How is Zambia, for instance? So you alluded that you have a fund, a Pan-African fund in financial services. So are you able to share information in regards to Africa, and specifically asking about Zambia when we're talking about investments?
I need to refresh my mind because I've not followed up what is happening so much in the African continent. But when I think about the macros for Zambia at this particular point in time, they are highly dependent on commodity. So and that is copper. So any happenings on the global scene really impacts them. So the asset classes across Africa, when you even think about Nigeria, the asset classes have come down. The prices have come down significantly. And especially if you are a commodity exporting country, they don't have the luxury of what we have, where their currency has depreciated by only 5%. When you think about Nigeria, I think the depreciation could be over 10% or something. So when you think about investing across Africa, it's good to look for a diversified economy. Kenya is one of those very diversified economies. And once you invest, you get support across board. But for something like Zambia, when I think about it right now, I don't think it's that attractive in terms of the macros factors, but the pricings would have come down. But it's something I need to refresh my mind on.
Okay. Thank you for Liz. But basically what you've told us here is when you're deciding to go and really look at Africa, every country is different. You have to really look at it. Are they commodity dependent? They're trading commodities like Zambia, copper, or Nigeria, oil, or because most countries are like that, or even Angola. But there's something like Kenya where it's diversified economy. So we are not too much affected. Even though we are affected right now, there are some countries who are more badly off. So when you're thinking about investing outside Kenya, investing anywhere in the world, just make sure you work with a professional money manager, because they'll do research and then let you know if this is a good investment option or not. But because I kid you not, there are places that you can actually go right now and you can get maybe even 20, 30% return on investment per, 30% per annum. But then again, even if they're government treasury bonds in different African countries, but then the question is, will you be able to get that return? I mean, there are many risk factors. So I always tell people, even when you're looking to invest, don't only look at the high return, right? Also look at the different factors. And that's why you need a professional who then help you decide and weigh, is this what I should be doing or not? So that's very important when you're thinking about investment. But I am very big about opportunities in Africa, but I also think it's not short term. You really need to be thinking long term, and you need to be making really deliberate decisions by working with a professional who can help you with that. So thank you for that. And I hope, Joe, we answered your questions. If you need any clarity, you can reach us out at Regal Africa at info@regalafrica.co.ke, and we can connect with Saiton or any of the fund managers that we work with, who can then be able to advise you specifically about that opportunity. As Liz has been alluding, everything in investment is personal. What works for you won't work for somebody else. But there are certain principles that are for everybody, but every time you make an investment decision, it has to be personal. What is it that you want? Where are you and where you want to go? And I see right now it's almost 7 o'clock. I think, Liz, I just have one more question for you, and then that will be it for today's Wealth Conversations with Gaitha. So the question that I have is actually someone who's just come from the diaspora. So they said, I just moved back from the US last year and I had a pension. It was a 401k, but I don't know where to invest the money now since I'm in Kenya. How would you advise? So people who are coming back from overseas, they decided they want to relocate back to Kenya, and they have this chunk of money, right? So where should they put it? What is your advice on that?
So depending on the age and what the financial situation is, and so I'm assuming that this is excess capital that they have to invest. There are a couple of things that you can. They're actually products for quote unquote older people. So like the income drawdowns, the tax benefits are really good. So, and what happens is you just go to a fund manager and administrator, and then you agree, this is what I need to survive on. So I will be getting my sort of drawdown every 3 months. I will be getting some cash every 3 months or every 1 year. So what then they do is that they will invest in a diversified portfolio, and then you'll just be getting your return. So that would be ideally the right path to take. But now, assuming that maybe you have invested in some risky assets, so then maybe you need some stability in your portfolio. So then you can actually look at more fixed income assets, maybe take advantage of the infrastructure bond or something like that, or actually put your money in your money market, and then you can get your money instantly. So what I would suggest is maybe a discussion with Anne or myself, whereby we sit and say, this is the money I have. What is the best way to use it? If you have a home, then you don't need to buy maybe another real estate asset. Maybe what you need is to grow wealth in a different manner. So with that kind of money, you can actually, the income drawdown is what comes to my mind, and a unit trust also comes to my mind, and maybe just an apartment for rental. But again, what are the kind of returns that you're looking out for? But I would really push for an income drawdown.
Okay, income drawdown. If you're older and you really want to actually have a certain amount of money that you will be spending every month, then it's very good to have an income drawdown, because then you know this is the amount of money that you will be making. I don't want to share my screen, but for anyone who's come for any of my wealth masterclasses, you will actually see some of the things that I show people. Just to give you an example, if you actually put aside $500 or 50,000 Kenya shillings every month for the next 25 years, right, at an average of 12% per annum, which is possible based on what we've been seeing, especially here in Africa, you'll actually make about 100 million Kenya shillings in 25 years. So if you're 40, by the time you're returning at 65, you'll have 1 million Kenya shillings, right? I mean, 100 million Kenya shillings, which is $1 million. And if you then take that 100 million Kenya shillings, and then you go in and put it in an investment where you're actually making 12% per month, guess what? Out of your $500 you were investing every month, or your 50,000 Kenya shillings, once you retire and you put it in a fixed income or a pension drawdown, depending on how you had been accumulating this money, you'll actually be making approximately 1 million Kenya shillings every month. 1 million Kenya shillings every month, only by you investing 50,000 Kenya shillings for the next 25 years. So you're thinking long term, or even the state, you're putting aside $500. Then you can be a millionaire, within 25 years. So those are the things that I hope you take out from this conversation. Whatever your goals are, whatever it is that you want to achieve within a certain time, it is possible, but you do need to talk to financial advisors who can be able to advise with that. And before I let Liz go and share her last remarks, I just do have to say what we at Regal Africa have been doing, especially after COVID, is we actually came up with a wealth book, which I've been talking about it the last couple of weeks, which really is a book whereby you actually have your wealth vision. There are 8 steps to creating wealth, all the way from understanding your financial net worth to actual retirement planning, estate planning, asset protection, investment, wealth accumulation. It's an 8-step process whereby then by the time you go through that process, either by yourself, by buying the wealth book, or by sitting down with a wealth advisor, you'll understand where you are and where you want to go. So in this case, like I'm saying, if you know you want to retire and have 1 million Kenya shillings in your bank account every month, then now you have to start planning for that right now. So those are things that you really need to be talking to us at Regal Africa at info@regalafrica.co.ke, and you can access that wealth book for 1,000 Kenya shillings or $10. So that's something you really want to be thinking about. The other thing is that I'm a wealth and business coach on top of the other things that we do at Regal Africa, and I believe this is the time that you really start thinking, what do I do for my business? What do I do for my wealth in regards to creating wealth? So that's very important, that you actually have a vision for your life. So again, if you want some of those services, including wealth advisory and understanding where am I and where do I want to go and what steps do I take, then you can reach out to us. The other thing we do, as I mentioned earlier, we work with 8 licensed fund managers, including Saiton. So if you need investment facilitation, Then now you talk to us and we walk through that process, making sure you go through the application, which you can do on your phone. You know, right now we can give you the code. Maybe when Liz in your last remarks can give the code for someone opening up a money market account at Saiton with only 1,000 Kenya shillings. We can be able to help with that. If you need a fund fact sheet for that fund manager, we can assist you with that. We can help you with the wealth plan. So basically what I am saying is, if you're looking to create wealth, speak to us, speak to a professional, and we'll be able to help you with that and facilitate that. So remember, when you're talking to any of these fund managers, remember it's Regal Africa that sent you there, so that we can continue in partnership with them. And so with that, we're almost at the end of this wealth conversations with Gaitha, but I'll give you, Liz, a couple minutes, or however long you would like, to just give us your last remarks around why should people be investing. Why should they look at the money market fund as an investment option? Why should they look at fixed income? And any other investment asset class that you'd like us to know about today. Thank you.
So thank you, Anne, for having me on the show. And maybe just to start off, finances are very important. Just the same way that religion is important, health is important. I don't think you can do away with finances. It's very important for you to get your finance life intact. So it's important to know where to go for to get the right information. And before investing, let's be less emotive. Let us spend time to understand. I think in this age and era, there is a lot of information out there. So I think people like Anne and myself, I think just coming out and telling people, this is what you need to know. And it's free information. So you can encourage as many people as possible to just dial in, listen in, and they will ask the right question, and we all learn from each other. So it's good to always look at places where you can get information. It's important before you make any investment decision. So there is this from Regal Africa. I think Saiton does a wealth management daily at every day 9 to 10. And the topics are different. You'll talk about, there is about pensions, there is about your maybe, what do I call them? Money market funds. So just try and get as much information as possible. Figure out how different people look at different matters before you make your final decision. People will present it differently, but means the same thing. But make sure you understand. So look for information, make the right investment decision, speak to investment advisors. It might look that it's expensive, but at the end of the day, there's nothing as expensive as making a wrong investment move. It's very difficult at times to unwind an investment move that you have undertaken, and it might be very costly. So just feel free to talk to the investment advisors, because they give you a lot of information. So that is it. If you want to invest in them in Saiton, speak to, I think, Anne, you are one of our agents, so you can actually take the people through. So you can always reach out to Anne. If you want to reach out to myself or to anyone in Saiton, I think you can get the information through Anne. My number, you can easily get that from Anne, and together we grow well. And maybe just for the basics of personal financial planning, I did one topic, and it's on YouTube. So maybe it's something that also someone can look at when you're doing your personal financial planning. What are the basic steps in personal financial planning? How do you invest in a stock market? So those are some of the things that maybe you need for you to make the right investment decision. So you can just go to YouTube and look for Jijenge, and you'll actually be able to see some of the basic tips of investment. Thank you so much, Anne, for having me on the show. I think this was really nice and very engaging. Thank you, and have a good day.
Thank you, Liz, for agreeing to join me on this show. I know you're very, very busy running a whole investment firm and making investment decisions. So I appreciate you taking the time to come in and talk to everybody on this show, because what I have learned over the years in me being in banking and investing is that people lack information, and that's why we are behind. And that's why you see a lot of foreigners coming into, our countries and Africa and making all this money. And we're always wondering, why aren't we getting wealthy? It's because they have information that we don't have. So that is the essence of Wealth Conversation with Gaitha, is just to share this information, at least on a high level. But I always tell people that when you want something personalized, then you will have to sit down with one of us. So then now we would work with you on that wealth journey, but that we do charge for that. Liz alluded to it a little bit, but I always say cheap is expensive. So you want to also pay for value. So a lot of the things that we do in the investment world are free. Like I said, facilitating this information, facilitating the opening up of accounts is free. Some of this information that you get here on Facebook is free. I actually have a YouTube channel, so you can actually go on YouTube, just type Gaitha, and you will get all the past videos that I have done with Wealth Conversations with Gaitha. And you can actually even share that with your family and friends and start having this conversation, because like I've been telling a lot of people, people have questions, but they don't know who will be able to take that time to answer that for them. And that's why I'm here to do that and bring in amazing guests like Liz to share with you her expertise and her viewpoints so that you can start on your wealth journey. Because I always tell people, this is the time where you learn, you listen, and you level up. So with that, I want to thank you again for joining us here at Wealth Conversation with Gaitha. We are on every Wednesday between 6 p.m. and 7 p.m. here in Kenya, East African time, but if you're in the States, it's 8 a.m. Pacific Standard Time. So again, I hope to see you next week so that we can have another discussion and more information about creating and managing wealth. And I wish you all the best and God bless you. Thank you. Bye-bye.